Hello everybody. So this video is entitled Circle Stock. Should you bet on USDC? Should you bet on the dollar stablecoin, at least the leading compliant dollar stablecoin? USDT is a bigger stablecoin, but it's non-compliant. In a lot of parts of the world, that's not the case for USDC. So let's talk about betting on USDC. Let's talk about Circle Stock. And let's talk about a stock that is actually down a little more than 70%. If you look at the past year, down 71%. My spreadsheet has it down at 72%. That's to tell you how this stock has been punished unfairly, dare I say. This stock has been unfairly punished from the crypto crash, because if you look at Bitcoin from a year ago is down nearly 50%, down 48.5%. Yesterday, Bitcoin was down 50%. So a one-year performance for Bitcoin is down 50%. Circle Stock is down 70% or 59%. It's down a lot. And so you may say, oh, well, there's been a big problem with that business. Why is that business down so much? Did people redeem USDC? Is USDC down also 50% from a year ago? And when you look at the USDC chart in circulation, you can see we were at about 70. We were at something like 77 billion, like at the February point in 2026. We're now at 73 billion, and actually if you compare to a year ago, we're up about 40%. So the circulation of Circle has not dropped. It has not been impacted. This is the chart over the past 6 years. You can see it's only up, and it hasn't really been impacted much. There's no such thing as less USDC in circulation. It's still about the same as it was a few months back, while Bitcoin has clearly dropped in a fashion that is incomparable to USDC. So USDC has a different user base, and stable coins are the future. At least that is my view, and I think stablecoins will only grow from here. There will always be more stablecoin. Once you enter the crypto system, I don't see people going back to dealing with banks and dealing with cash and wallets. Once you're in the digital internet money system, even if you decide on USDC, a stablecoin, I think it's very rare that people redeem it, and the data shows that. I mean, we've had an epic crash in crypto, and we went from 77 billion to 73 billion of USDC. So barely changing. Maybe people just got money out to I don't know, go on vacation or something. It doesn't really matter. It doesn't really change in my view. So let's talk about the business briefly. So how does this business work, right? Well, first of all, we need to highlight that USDC and Circle, they're buddies with Coinbase. That's the best way to put it. In fact, I commonly see people sometimes make the mistake and say, oh, it's called USDC because of Coinbase. The C stands for Coinbase. Well, no, the C stands for Circle, but the partnership with Coinbase is undeniable. And if you look at any interview of the CEO, Jeremy Allaire, which I've watched a few, he looks at the partnership with Coinbase just like Netflix would look at AWS. Coinbase is the main cost of doing business. You have to share the fees with Coinbase, because Coinbase is kind of the platform necessary to build USDC. It's the global, compliant, centralized exchange on which USDC is built, and so you need that partnership with Coinbase. And I like it a lot when he says about the main cost of goods sold for a company like Circle is paying the fees to Coinbase. That's the main cost. And so how does that work? Well, all of the USDC held on Coinbase, that means that the interest income goes entirely to Coinbase. And if it's held outside of Coinbase, then they do 50-50. So that's a steep expense for USDC to partner with Coinbase. but Coinbase pretty much runs everything in the background, and they even hold the reserves for them, and they do a bunch of stuff for them. It's a deep partnership. It's also an equity partnership. Coinbase holds a major equity stake in Circle, so they also have an equity partnership. Not necessarily a bad thing. If you look at a company like Zoom, if you look at a company like Netflix, these companies were built on AWS and paying Amazon Web Services bill. That's like how this works. So it's not too bad of a deal in my view, but it's true that one could look at Coinbase as a stealth way to invest in Circle. Now, I didn't highlight this because I thought it was obvious, but how does this business make money? Let me still highlight it a little bit. It makes money by investing in treasuries, right? It takes the stack. It takes the how many billions of dollars? 73 billion. It takes the 73 billion dollars of USDC. It has that money backed by short-term money, right? Treasuries. 3 months T-bills, all of that short-term commercial paper, overnight paper, very, very short-term, quickly redeemable, dollar-denominated treasuries. It takes that money and invests in these treasuries. And so it makes, 3.8%, 3.7%, something like that of that money. So it earns 3.7% on $73 billion. And that's the revenue, that's the money that they make. That's their money. And out of that money that they make, they give a bunch of it to Coinbase. And that's where the split comes in. So the interest income generated, what they call the reserve income, that was 653 million for the last quarter. So 653 million. And out of this 653 million, what is the main cost? The main cost is giving it to Coinbase, and that's about $400 million is what they gave to Coinbase, and then on top of that they have operating expenses, and so the true number of those operating expenses is actually not 242 million because they had a lot of accounting things that made it be so high on operating expenses. Adjusted operating expenses are much closer to what's going to be in line, 136 million operating expense, and that's the infrastructure, that's the product distribution, but that's the engineers that they have. They have tons of engineers. They are building their own blockchain, the Arc blockchain. So I'll get to that in a second. But otherwise, it's a very easy business. You have $70 billion worth of USDC in circulation, backed by $70 billion worth of treasuries, earning you nearly 4%. And then you give half of that to Coinbase, or 100% of that to Coinbase if that USDC is held on Coinbase. And if you look at the split, where is USDC held? They are very transparent about this. They tell you clearly where it's held. It's held 27% on Coinbase. So 27% of the interest income goes entirely to Coinbase. The rest, the off-platform, as they call it, is 50-50. And so that's very interesting, and key to this is how big is going to be Coinbase. In many ways, if Coinbase is not too big in the future, a Circle will win a little more, but it really doesn't matter because Coinbase earns 50% anyway. So Coinbase has a strong incentive for USDC being the adopted stablecoin of the world. And a very interesting part of this business, of course, is the reserve rate. And note that they put in Q1 2026 3.5. Why? Because the rates were down, the yields were down. What do you think is going to be in Q2 2026? What has happened to the yields? Why has the market crashed so bad this month of June? Why is it in so much pain? Because the yields are going up. So whenever the treasury yields go up, this is actually very good for Circle. Now you would think the market would notice that, but no. The market just crashed Circle because the market is in a crypto bad mood, not paying attention to the fact that they're going to make much more money if the rates go up, right? And the fear of rates going up should actually be very bullish for USDC because Circle is going to make more money on the reserve. And by the way, some of the criticism about, for example, not giving yield on stable coins, you may remember that whole debate a few months back, that's actually bullish for Circle. it's bullish for Circle that they don't have to pay yield on stablecoins. And this is pretty clear. They've established the banks don't want yield. There's not going to be yields on stablecoin. So this is pretty bullish. Where do they hold the money? They hold the money. So like I said, it's a mix. They have a transparency website where you can see where all of the money is held, and see overnight reserve treasury repo, bank deposits, systematically important bank deposits. So the 5 banks, right, the JP Morgan and Change, and under 3 months treasuries. That's where they hold the cash. That's where they hold the money. And they actually have even more reserves when there is in circulation. So interesting to see that. Now, let's talk about regulations. So, a big deal about USDC is that USDC is fully approved, fully compliant in Europe and in the United States. In Europe and in the United States, USDC is fully compliant, which means that you can use it on centralized exchanges. You can on-ramp, off-ramp crypto thanks to USDC. And USDC is even compliant in Europe because the USDC that circulates in Europe is backed by dollar assets held also in Europe. And so, and again, I find that pretty interesting because Europe is pushing for a European stablecoin. I'll get to that in a second. But USDC is still okay in Europe, and that's not the case of USDT. USDT is not okay in Europe, and USDT is not okay in the US. So USDT cannot operate legally within the regulated financial systems of Europe and the United States. Severely restricted. Understand, no on-ramp, no off-ramp. You have to swap it to USDC before you can redeem it. So people swap USDT to USDC. But USDT is the pioneer. USDT is the offshore giant, right? So a lot of the value is still held in USDT. So if you look at, and USDT could be seen as a competitor, right? So if you look at USDT, it's still 67%. There's 5% breadcrumbs here, like PayPal USD perhaps is in those 5%, all that sort of stuff. So I know SoFi is a stablecoin too. So you have the breadcrumbs, and then you have the big one, which is USDT, which has been on the decline, by the way, 70%, 69%, 67%. I wouldn't be surprised to see it decline more. And then you have USDC. USDC has actually been fairly stable if you look at around 28%. It seems like it is the breadcrumbs who are taking away some share from USDT. But USDT is the giant that they're trying to take share from, all of them, the offshore giant. But the money is still mostly in USDT. USDC is the second one, but USDC is the first one in Europe and the US now. And when it comes to transactions, they are by far the first. When it comes to transacting, and if you go on Circle's website, they show you this promotional video showing businesses accepting USDC, showing employees getting paid in USDC. If you look at the actual transaction volumes as reported for transaction by Visa, for example, USDC is nearly two-thirds of all of the observed transactions. So value held, USDT wins. Transactions, USDC wins. And value held, I think over time, it's very likely that those two could be equal over time because USDC is going to keep growing. USDC is working very hard to grow in Europe and in the EU. And now that they're only game in town in Europe and in the EU, this is a pretty big deal. Also want to point out, if the EU moves against USD-backed stablecoins, which it seems it really doesn't like. And remember, the EU is 450 million people, so there's a lot of crypto users over there. What is Circle doing about this? Well, that's weird. EURC, I don't even know what to say. EURC, there you go. You have the EURC. It's only 358 million. It's very, 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 very small right now. But 350 million, that's still nothing. But that's growing pretty fast, 2x year over year. So are we gonna reach $1 billion there at some point? I believe so, right? It's moving fast. The largest euro stablecoin. So the odds are, if stablecoins become a thing, the largest stablecoin circulating in Europe might be from an American company, Circle. So it's they're compliant with MiCA and everything. Interesting too. I think this is probably slept on, but USY assets, USYC. So this is tokenized money market fund, a tokenized money market fund, 2.7 billion. Right? That's nothing to sneeze at either. And that's growing very fast, 4 times year over year. So people want to hold bonds, which is, it's very similar to tokenized equity, but except Circle is going after tokenized bonds, and it makes sense because they have an expertise in that. So a tokenized money market fund, there you go, USYC. So they may make quite a bit of money from that. Forex year over year is very impressive. Granted, it's from a low base, but it's very impressive. Your C could accelerate. You could see a Forex in your C, although I don't know how big it's going to pick up. So this is still breadcrumbs. This is not the main business, right? You get that. It's new. These are all the initiatives. The main business is the treasuries. The main business is the 70 billion sitting in treasuries. All right, let's talk about another side thing, another side business that they're launching. They're building their own blockchain. Why are they building their own blockchain? Because they want the transaction fees to be paid with native USDC. The transaction fees should be paid with native USDC. Why is that how it works? Because look, if you use ETH, if you use USDC on ETH, your USDC transfer fees have to be paid in ETH, in gas. The gas fees are in ETH. For ETH, it's a problem because gas fees are very volatile, as we know, and it's a problem for small transactions especially. Now, Solana is the same story, but it's a much better story on Solana because transactions are dirt cheap on Solana. So all you need is like $1 of Solana, and $1 of Solana can probably pay for hundreds and hundreds of transactions of USDC on the Solana blockchain because they cost pennies, right? But there's still a problem, which is you still gotta kind of be a crypto native, because you still gotta buy some Solana. You have to have some Solana. And granted, it's a minor inconvenience, but people get confused. They're like, "What do you mean I can't pay with my USDC if I don't burn some Solana, some micro amount of Solana?" It's still two assets, right? You still, if you use USDC on ETH, you still have to have some ETH. If you use USDC on Solana, you still have to have some Solana. So you have to deal with two assets. It's complicated for someone who just wants USDC and who just wants it to work. And so there's two solutions to that. One solution is to simply, for the developer of the app, to just pay the fees for you on your behalf. Another solution is to create a new blockchain where USDC is the native gas. So USDC is the native gas. That's the main reason why they created Arc. USDC as the main native gas. And of course, it's a modern blockchain, and there's a lot of risks associated with that. I've seen bears come out against this, saying, okay, they're building their own blockchain. What if there's an exploit, right? That could create some bad press for USDC. Like, what if there's some hacking? Like, what's their expertise in creating a blockchain? I saw some people criticize that initiative. I personally don't have a problem with that initiative. I think it's a very fair initiative. I like the idea that they're building it with institutions in mind. So institutions may actually be using Arc and building their own USDC apps on Arc. And could you imagine some bank having an app built on the USDC blockchain, and the user has no idea that it's actually running under the hood on the USDC blockchain? So and I guess it's called Arc, right? But I'm calling it the USDC blockchain. So they're building their own blockchain. That's fine. Look at the backing. The backing is very, very impressive. You have big names backing them, building the blockchain. Interestingly, Coinbase is not in there, right? That's very interesting. But Internet Continental Exchange, A16Z, BlackRock, these are big names backing this. And it's interesting that when they launched their blockchain, of course, 25%. It's a $3 billion launch. Think about that. 25% was allocated to Circle, to them. So kind of akin to printing money here. If this works, I mean, I think this is a gamble, but if this works, if this gets adopted, they could make quite a bit of money on it, and they could earn the fees. Fee capture. It's all about the fee capture. They've been trying to be more fee-based. Of course, Circle is anticipating a drop in interest rates, and if interest rates drop, this is a business that's going to need to have fees, or that's going to need to have growth. If you have a lot of growth and interest rates drop, you'll be okay. They are building also for agents, talking about nano payments. Gas-free USDC transfers as small as 0. allowing high frequency machine-to-machine payments. I love the idea of nano payments. I think nano payments could change the world pretty much. It would disrupt so many subscription service if you had nano payments. Think about that. You could disrupt all sorts of subscription. Instead of paying, I don't know, $2.99 a month for something, you would just pay for whatever you use with a nano payment. I think this is a very innovative thing. We'll see where that goes. Okay, this is deep innovation, right? This is not what the business is going to be valued on just yet, just now. But it's important to see that it exists. And let me conclude with the valuation. I'm going back to the valuation. So, USDC is the compliant leader in its field. It's kind of a blue chip in the space. At least their product. The product is the blue chip. They have the most famous, highest network effect stable coin. So it's a very elite product, and if stable coins become a thing, it's tough to imagine not USDC being the big winner. Tough. And because of that, they are kind of a blue chip stock. So keeping that into account, what's the valuation? Enterprise value over gross profit over revenue growth, which is what I use on this channel, is a 0.46. 0.46. So it's cheaper than 0.5, so it still gets a green flag, but it's not too cheap, right? I would rather see Circle under 0.3, and so for that, the stock price would need to be in the 50s. So a little expensive for my taste, but need to keep in mind that this is the blue chip in the sector. Now, perhaps a relative valuation is more interesting. Let's compare it to Coinbase. Coinbase is a stock that is also down a lot, down 52%. And why is Coinbase a good comparison? Because a lot of the money Coinbase gets is kind of linked to Circle. Of course, Coinbase is an exchange, and they make the most of money from their exchange, and they're a custodian, and they do a bunch of stuff, right? So I don't want to conflate the two, but I think it's a good peer for valuation to compare valuation. Coinbase is nearly 3 times more expensive. Coinbase doesn't have nearly as neat of an EBITDA margin as Circle does, not nearly as good. And Rule of 40, Coinbase doesn't achieve that at a 22. We don't have Rule of 40, and Coinbase doesn't grow as cleanly. Only 6% revenue growth. So about Circle, what I like about Circle is it's much cheaper than Coinbase. So if pressed between the two, I would obviously go for Circle. And again, betting on the adoption of stablecoin, that's a much more smooth ride than betting on Bitcoin itself. And Bitcoin has had a lot of pain. We're not seeing that pain in stablecoin adoption. So that's point number 2. I have 2 last points to finish this video. First of all is look at the guidance, USDC in circulation. Of course, this is the most important thing. How much USDC is there out there? The most important question is, will they get to $1 trillion worth of USDC at one point, earning 3% yield, or maybe less, or maybe more? Will they get to that? If they get to that, Circle could be an enormous company. Circle could have very, very long-lasting growth. What if stablecoin adoption is a 15 to 20-year cycle? This is a company that could sustain 40% CAGR for a decade plus. For a decade plus. If we slowly move to a fully stablecoin world, this company could grow for a decade plus. That's very, very special. Right? Not a lot of companies you can say that about. So that's very special, and their guidance is a multi-year through cycle. So how many years of growth are we going to have in USDC? Maybe a decade, maybe more. That's point number 1. And then point number 2 is that growth going to be enough to offset what I've been saying for 5 years now, the inevitable drop in interest rates? Is it enough to offset that? Right now it's looking pretty good, because right now, if you look at the CME Fed Watch tool, it's everybody's saying we're going to raise the rates in September, which would be a catastrophe in my view. But it wouldn't be a catastrophe for Circle, would it? It would be great for Circle. In my view, the rates are dropping over time, and especially as Circle bids on these bonds, right? As people move to stablecoins, if the whole world moves to a stablecoin USD system, this is very, very bearish for bonds, because there's going to be a lot of bidding for bonds. The question is, what's going to be the long-term yield? What's going to be the long-term yield on these instruments? It's probably going to go lower. And so how are they going to handle this if we move to a lower, more stable rate environment? Maybe they can hold longer duration securities. What I don't know is where the regulation will go. How will they be able to earn a yield? Will they have a lot of leeway to earn that yield, or do they not? And do they have to buy short-term instruments, and what are those short-term instruments going to yield? Right, that's a big question, and I think that's also the reason why they are building these alternatives, and that's the reason why they are trying to collect these transaction fees on the network. Because if yields go back to zero, Circle is not going to make a lot of money, and so this is a complex bet on this. What's going to be the long-term yield? Is it going to go back to 2% at some point? I believe it's going to go back to 2% at some point on the yields. And so that means their revenue is going to be cut in half. But is their revenue ever going to be zero? I don't think it's going to be zero, right? There's always going to be a little bit of yield, but not too much, if that makes any sense. Like when the yields were at zero at the Fed, you still had some instruments yielding 1.5% to 2% when the yields were at zero at the Fed. Does that make sense? So just because the Fed fund rate could really, really come down a lot, which is what I think is going to happen over the next 5 years, the yield earned by a Circle could still be near a 2%, because lenders will always require a premium, even if the Fed doesn't require a premium, because the Fed is a mad money printer. The buyers of bonds will still require a little bit of a premium. So that's kind of what I view here. But it's definitely a risk. Rates dropping are a risk for Circle. Will it be offset by adoption of USDC around the world? Yeah, I think it should be. It should be offset by that. And what I find the most exciting, I said that already, I'll say it again. What I find the most exciting, 40% CAGR for how long? How long is that going to be growing at 40% CAGR? Could be a decade. So that's what I like about this stock. I find it excited. Anyways, this is not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.